Exchange transaction revenue. Now, you're going to see this in non-for-profit and government, right? Exchange. You give something and get something. It's not just a one-sided transaction. If someone receives a grant, that doesn't necessarily mean you have to give something up for it. You just receive free money, essentially. So that would be a non-exchange. But exchange revenue is, okay, as a not-for-profit university, I receive tuition money and I give you an education. Exchange transactions, so we earn resources in exchange for a service. Revenues are recognized when realized or realizable and earned. So basically the same thing as our normal corporate accounting, right? Accrual-based accounting, revenue recognized when earned, pretty much the same. Revenues classified as increases to net assets without owner restrictions, right? So that's the classification for them. We don't have retained earnings, right? We don't have equity because we're a not-for-profit. No one owns the not-for-profit. So those revenues are immediately classified onto the balance sheet as net assets without donor restrictions. If this was a corporate entity, revenue minus expenses goes to net income, which goes to retained earnings. So it does find its way onto the balance sheet either way, regardless of the entity type. What are some examples of revenues earned by not-for-profit and exchange transactions? Well, student tuitions and fees. They give you education, you give them money. Hospitals, you give them money, they give you services. Membership fees. Maybe you're a part of a youth group. They give you, activities in the youth group and you give them membership fees. Those are all exchange transactions.